Good morning, traders. What a night last night. You said the US dollar really have a huge gain across the board, led by the euro, falling on the back of ECB being a little bit more dovish than the market was looking for. Talked about this yesterday, the positioning of the euro, the ECB ability to talk down the euro, given that they've seen what the market wants, what the market doesn't like. What the market doesn't like is talking about extensions, open-end extensions of QE. That's what you got last night. Also, what you talked about is the chance that they could increase QE again. That market doesn't like that as well. In terms of a limit, there was no limit put on QE either. Market didn't like that. And in terms of rate hikes, looks like it's not until well into 2019 out of the Eurozone. So short-term yields in Eurozone are quite weak. On the flip side of that, you got the US dollar just charging forward. And finally, the euro has given in. And so the US dollar's strength against everything is becoming more pronounced. The flip to the downside here, this 116.20 is a previous big level on the weekly chart. You can see what we're looking at here is the 2016 high is now being tested. So the 2016 high is where support should be found, given that it was a big level that the market was targeting on the top side. If we do break below, then a much bigger level in terms of market significance and what everyone watches is the 115 level. All right, so the 115 level could be the bottom as well, or just a support level in the short term. In terms of going into a range trading mode for the euro, I mean, on some fronts, the beginning of the end of QE is a good news story, but what really matters in the market is yields, and yields in the US are just surging higher. Tax plan is coming, details next week, and the market has got the topside movement potential. So dollar yen still has to get past its resistance, which is the 114.50 level, and you can see on the chart here it's relatively close. US stocks are making fresh highs, DAX is making fresh highs, risk is really on. Aussie dollar, Kiwi dollar, CAD are all getting wrecked here. This is the commodity currencies as a group have the biggest to sort of drop in terms of their interest rate yield advantage of these currencies is getting eroded. Yeah, so when the US is raising rates and the RBA is staying pat on low inflation for the foreseeable future, then the gains or the higher interest rate in Australia is, especially on the short term, is getting eroded. And within 6 months, the US is going to have high interest rates in the Australian dollar. So that could lead to just a structural change in the market, and rather than gaining interest for being long the Aussie on a daily basis, you have to pay interest to be long the Aussie. And that's a difference, but subtle, but it's big. All right, guys, have a good weekend. In terms of data, the big news is coming next week. We got the Bank of England, you got the NFP, you got the Fed chief being announced, you got the Trump visit to Asia. So there's a lot going on next week. Volatility is picking up, trading conditions are getting better. There's a lot to be focused on. There's a lot of ideas to be expressed through. If you do want to talk to a dealer, come through on the links below. If you're not a member of EasyMarkets Active Traders Group, you can join up on the link below as well.